Recently on the channel, I have been talking about a company named Castor Maritime, ticker symbol CTRM. Well, in my last couple videos, I did bring up a lot of the issues that were related to this company, and overall, I did give the reasons as to why I was not going to be starting a position into them right now. Well, I do think that my intentions behind those videos did get mixed up a bit. I think some people were taking it as if I was really getting on this company and just saying that it wasn't a good company, that their financials were messed up, that they didn't have a good products or no services, and they didn't have all of these different things, and that's truly not it. Now, in this video, I did want to talk about the other side of the equation. I did want to talk about the good things and the catalysts that I do see in this company, because at the end of the day, I do believe that this company has loads of potential, but there are just certain things that they don't meet, and there's certain criteria that they don't meet for me personally as an investor. Now, that is not me saying that those of you who have holdings in the CTRM or are planning on starting a position in CTRM are in the wrong at all. I think that they do have a lot of potential, especially if they keep taking the steps that they're taking. But whenever it comes to me personally, again, it just doesn't meet certain criteria, and I stick to my criteria very, very strictly. So with that being said, what I wanted to do today is just talk about the catalyst and talk about some of the positives around this company, because it is kind of unfair to just talk about the negatives and not necessarily bring up everything, as it would equally be unfair to talk about the good things about a company and not the bad things. So in today's video, that is what we will be doing. If you do want access to a Discord of over 80 plus members who talk about trading and investing, they talk a lot about this company. They talk about a whole bunch of different penny stocks and companies. If you also want access to my team of investors who help me make the decisions that I make, they talk about their trades, their stocks, I talk about mine. I give daily updates on the trades that I'm making plus my portfolio. And if you also want access to my content early, all of the subjects and research associated to what goes on in these videos, definitely consider heading to the description below and seeing the link from my Patreon. I'd really do appreciate every single one of you who does support my Patreon and help support the channel. It really goes a long way. But with that being said, let's go ahead and let's take a look at some of the catalysts and the positive things going into Castor Maritime, ticker symbol CTRM. So the first aspect that I did want to address is their overall, business model whenever it comes to the fleet in which they are creating. Because one thing that I have said recently is I was not a super big fan of the dilution that was happening as they were trying to grow out this fleet. I did say that for me personally, it wasn't something that I was a big fan of, because I'm just not a super big fan whenever we see companies continuously doing offerings. Yeah, it is raising capital, but at the end of the day, as they do continue to grow out these outstanding shares, we do see dilution happening. And just for me personally, I'm just not a super big fan of it. But whenever it does come to their overall business model, I do think that it's honestly not a bad one at all. I think that it has a lot of perks and positives, and the way in which they are trying to go about creating this fleet is honestly a pretty good idea. Now, I do have this article right here. This was released in the middle of 2020, but the way in which that they are doing these deals still is applying today. They're still doing these deals in the same methods, and so I felt like it would be a good idea to just take a look at some of the details of this agreement, as the majority of the details in this agreement also carry over to other ones as well. So here it is. It says that Castor Maritime, a global shipping company that specializes in the ownership of dry bulk vessels, announced that it had entered into a new time charter agreement with Oldendorff Carriers GmbH & Co. KG in connection with its previously announced acquisition of a Panamax dry bulk carrier at a daily gross hire rate of $10,300. Now, the charter agreement has an expected term of a minimum of 3 months and up to a maximum of 5 months, and is expected to commence after the vessel's delivery to the company. This will be sometimes, of course, between the 5th and 25th of August 2020, which we did see actually go through. Now, as a result of this charter agreement, the company's gross revenue is expected to increase by $0.9 million based on the minimum scheduled period of the time charter, and could reach approximately $1.6 million should employment be extended to its maximum period. So as we can see here, that the way in which they are contracting these things out, and that they have a daily gross hire rate of over $10,300, does provide a lot of potential consistent and overall stable revenue, especially whenever we do get back to quote-unquote normal times. Because now, if they were going out fully and just buying these charters, I do believe that would it would be an investment for sure, but it would take a lot longer for them to see the returns. Whereas this model where they're contracting out these different charters is actually a pretty good idea, and I really do like that. I think that's a good way to go about acquiring a pretty big fleet whenever you're an early on company who may not have the funds to full out just buy a whole bunch of different dry bulk vessels. So one thing about this company, I will say this is a catalyst in my opinion, because I do think that as time goes on and as we start to see this overall industry grow, this company grow, and times go back to, like I said, quote unquote normal, that we will see this turn into a pretty consistent path of income. And I think that having an overall consistent source of income is never a bad thing for a company, especially whenever you have investors who look for that type of revenue. Now, another catalyst that I do believe is going to be very substantial, and that was actually brought to me by a subscriber, so I do appreciate it. It says here that the global dry bulk shipping market is anticipated to grow at a compounded annual growth rate, or a CAGR, of 4.14% during the period spanning from 2019 to 2023. The market is expected to be valued at $402 billion by 2023. Now, I know it is a little bit dim, but I will read it out to you guys just so you can see some of this extra information. It also says that the growth of this market has been driven by rising population, accelerating economic growth, higher urbanization, rising steel production, and growing coal industry. Growth of the market would be challenged by high transportation and infrastructure costs, an act of piracy and trading obstructions, and to overcome the challenges in the market, noteworthy trends like fluctuating scrapping rates and increasing coastal shipping are expected to boost the market in the future. So there are a few things going into this overall operation that are going to make the industry in which they are targeting grow, and that is always a good thing. Whenever the industry in which you are in is growing, that is a good sign because it means that the potential is also growing. Because if you are in an industry, of course, that is maybe declining or dying, well, of course, even if your product is amazing, there's only a certain amount of people and there's only a certain consumer base in which you can appeal to for a limited amount of time until that overall industry is no longer relevant. So the fact that it is doing the inverse, the opposite, and saying, okay, well, we're going to be in an industry that's growing, that's going to increase our potential consumer base, that increases our potential revenue, and that drives our potential growth rates up through the roof, simply for the fact that we are, there's more demand for the services that we offer. I really do like that about this company. I think that's a phenomenal aspect, and that is something to be very proud of for the company itself, to know that they are taking a very big step into an industry that will provide them a lot of potential growth. Now, this is another somewhat of a catalyst. It's more of a 50-50, but it is something that I think will overall in the long run be good for this company. It says that in December 30th, something that we did see about 2 to 3 weeks ago now, they received their 180-day extension from the NASDAQ to meet NASDAQ minimum bid price rule. Now, the reason that I believe that this could be beneficial for this company is that since then we have seen them grow up to about 45% over the course of the last 2 or 3 weeks. So that means they have about another 5 months to continue this growth to hopefully see themselves, gaining that momentum and remaining over $1 for a 10-day period. Now, with the growth that we have seen recently, if they are able to continue this momentum, then I do believe that it is very, very likely that they will reach that $1 mark by the end of that 5 months. But of course, that is contingent upon the fact that this thing does not tank too much at any given point, that it continues to maintain a good momentum, and we really see it start to pick up. Honestly, I think that the overall charts and what it has been doing over the last maybe, 6 months has been pretty good. We have seen it starting to have a turnaround from November to now, but based off of the year and based off of the 5 years, it is a little bit scary whenever you see how much of a drop it's had, and it's just been a pretty much continuous drop, because even though we have seen some good growth, the growth that we've seen there in comparison to the negative, the loss that we saw throughout this time period was very substantial. Now, this was a very hard time period for the overall industry. We did see many companies in the same industry stock price really take a beating. So hopefully with this turnaround, and hopefully maybe with the soon acquisition of a CFO, and just them continuing to grow out their fleet, maybe not necessarily dilute so much, but start to use some of this new incoming revenue as their industry does increase to grow out their fleet even more, to expand their consumer base and take home a lot more profit, then at that point we could potentially start to see this thing turn itself around. I really do think that they've been making a lot better steps in the right direction. I think there are still some more steps to go for them to overall be a very safe company, in my opinion, but I would say that they are taking the right steps in the right direction, and I think that if they continue to do so, they will probably more than likely get over that $1 mark within the next 4 or 5 months here based off of this growth, and then we could see them maintain that, not get delisted, stay on the NASDAQ, and then of course if that does happen, then that will be a very beneficial catalyst for this company as well. Now, coming off of what I just said about them taking a lot of the steps in the right direction, we can see that last year was honestly not the best year for them, but it does seem like they made some good moves. I will give it to them, because I do typically say, I've said in the past that they don't have the best financials, but that does not mean that they have not made decent and good financial decisions. Again, I don't hate this company, nor do I dislike this company at all. I think it's a very interesting company to say the least, but I've always said when I make these videos and when I do these analysis, I'm simply just talking about whether or not I'm going to invest into these companies, because I'm not a financial advisor. But as we can see with this company itself, we can break down a few things to see that they honestly did not have a very horrific year last year. Now, their revenues netted at $2.8 million for the 3 months ended September 30th of 2020. This compared to $1.2 million for the 3 months ended in September 30th of 2019. That's a 133% increase in revenue from, this quarter to the quarter before it, or the year before it. So that is very, very good, especially for the year they were having, and the industry took a beating. Now, of course, whenever we do look at the overall net loss income, they did lose about $580,000 for those 3 months as compared to an income of $244,000 for the prior year. So that does mean that the overall expenses did grow substantially throughout that time, which could be expected as, of course, like I said many times, the industry was not doing well. Now, there was something very specifically that I did want to show that kind of shows just that it was almost out of their control. They were doing the best that they could, but the overall effects of this entire pandemic was somewhat out of their control. It says here that the average fleet time charter equivalent of 8,081 per day for the 3 months ended in September 30th of 2020 was compared to 10,400 for the 3 months ended September 30th of 2019. So basically what that's saying is that their average charter, the fleet time charter equivalent was less compared to the year before, but that means that their revenue was still more than it was the year before. So that what that means is that they had more fleets and they had more fleets out there making money, but simply for the fact that it was so much lower than it was this year before, their expenses grew and they weren't able to maintain profitability. Now, what that tells me is that if the time comes that we are back to quote unquote normal and that we see a year like we did in 2019 with the increase, seeing this number maybe return back to around that 10,000 to 10,500 range, if we are then able to see that, I would not be surprised whatsoever to see their net loss, their net loss or gain of income grow substantially, considering how well their revenue itself grew over that same period. Let me know what your thoughts are on Castor Maritime, ticker symbol CTRM. I really do believe that this company has loads of potential. I think that in the future, I may start a position into this company. But at the moment, again, there are certain criteria that they don't meet. Definitely check out my other videos if you're curious on what those are. I really would like to know your opinions on this company down below. What's your benefits? What's your risks? What's the negatives that you think are associated with it? Definitely let me know down there. If I do decide to start a position into this company, the first people to know it would be all of those on my Patreon. So if you are curious about the trades and the portfolio that I'm growing out, definitely head to my Patreon in the description below. It is an amazing opportunity, in my opinion, for anyone involved. With that being said, I will see you all in the next video. I've been posting 2 to 3 times every single day, so I expect to see you soon. Peace.